Alrighty, so starting the day off. Today was hella rangy. Not the trending days that I looked for yesterday. But if we go back on the hourly, my previous video that I posted, the bias of either coming to here in a wick to take lower, ultimately played out. And then after huge moves like this, we usually get like some sort of consolidation and ranging days. Like we'll see like sideways action like that, and then the huge dump, then we'll have this weird stuff below here, and then I don't know, big drops, consolidation, big drops. So yep, looking at the daily, the thing I saw this morning was we were in a 15-minute zone. I wanted to take that long for the beginning of the day, and if we take a look at this zone down here, I kind of plotted them all out in advance so you could kind of see some trades I took. Ultimately tapped into the 1 minute zone. There was no entry off the 1 minute inside the 15-minute, which was most likely all of this. There was 1 minute continuations, and I kind of figured out that we were going to have a rangy day simply based on the fact that when we tapped into here, we didn't break through this zone right here. We kind of wicked it and then went shorter. And then I looked for longs here, and I didn't look for these right here. I just didn't really do much. And at this point I kind of figured out we're not going to really trend anywhere. We're just going to go sideways most of the day. And so times we go sideways, I pretty much use the extremes. So an extreme would be like up here, extremes are down here. I'm not really trying to trade like zones in here and stuff like that because it kind of just fucks around a lot. So let's just kind of get into it. We'll go with the first 1 minute zone. We'll start at the bottom here, and then we'll kind of go back here to see if there's anything. My two entry models are push lower, then a break, come back to then take long, or push lower and then taps into a sell zone, wicks this low, and then you take a buy stop of the candle that wicks the low down here. A good example really quick would be something like this. This is the 1 minute zone. We push down, push back up, wick the low, and then you could theoretically buy stops like this, cover the low, and this could be the trade. Obviously if you held it, great, but good luck holding something that long. And yeah, so this was that initial 1 minute zone. Taps in, was looking long here, it immediately taps into like a 15-second refinement of the 1 minute. No real entry, it kind of just is what it is. If you wanted to continue to take this long, there was something like this that I was looking at, but I did not end up taking it this morning simply because I don't like taking zones this far. I would love to have seen it. The ideal is push down right here, come back, and I want to see it like around here. This seems a little overextended. Of course, the ones that are overextended work. And then if you took this 1-to-1 break even, and your first take profit could be like around here. Because it's an opposing zone, there's nothing really to the left. If we were trending, this probably would just continue through the highs. And yeah, could have gotten basically like 7R, 6R, or even more if you held it, but holding through all this chop is a little crazy. More continuation right here, but that's kind of just, if we're playing devil's advocate, there's really no reason you would have taken that unless you were just bored. Next 1 minute zone would be the lower one down here. We can see that even down here there was like another refinement you could have made to then continue on like the 15-second. We take this, push up, comes back. It's actually a 30-second. Respects the sell zone right here, but because we're in a higher time frame bullish zone, we expect this to count as a retracement back to then continue long. And again, that's what happens. if you didn't have this higher time frame bias, you're pretty much guessing that this is going to work or this is going to work, and you don't really know. So this higher time frame 1 minute shapes the idea that this is going to be a pullback to then continue long and not a continuation lower. Sure, you can be wrong. I mean, everyone's wrong. So if you didn't get in initially on this first 30-second, comes back. Love to see lows in front of my zones. Taps in right here and then continues. You can see on a 15-second it looks even a little bit better. Actually, whoops, never mind, it doesn't look better. It's too small, but that would be the ideal trade right here. And then you'd probably take profit around this zone up here. Ideally, if not, you would have already been taking profit here, because that's where it could reverse. It's the first opposing zone. The next one would be all the way up here, and yeah, that would have worked well. If you didn't take profit there, probably would have taken profit at the candle close like this, because a lot of times when you see candle closures with a wick instead of a body, it will reverse. Sure, it reversed into a bullish zone to then continue, but that doesn't guarantee anything. You'll see later when there was news, a lot of times that happens. It wicks the lows with stuff. Anyways, continuing up, that is a 1 minute zone. So we go back on the 5-second, kind of see what's up. Let's play price. We kind of see double top forming. Not that I trade double top specifically, but I'm just keeping in mind on the 10-second, there is this zone right there that did get tapped into. And so I'm kind of seeing what ends up happening with that. If it continues higher or breaks lower. Again, you see this wick like this, takes out the high. If you really wanted to be aggressive with this, you just take the close of this candle, you sell stop the low, stop loss above, and you target stuff on the left. You target here for, you could target here for 2R. First TP, it's some sort of like resistance. Not that I trade support and resistance, but you can sometimes expect a bounce or a reversal, and I'm basically just taking profit prior to all these other things. And so the next TP would be there. I'm not sure exactly what ends up happening. If we look here, it taps in wonderfully to another zone. Again, that's pretty precise, pretty perfect. Highs in the way, then it wicks above the highs. Same sort of concept on a lower time frame. You can see it wicks this high, and also if you want to be crazy about it, you can like wick all these highs. It's failure to like break up, which is another great sign. You could take it on the break of the doji. You can take it on just tap at the stop loss above or a stop loss above the candle. Depends how you want to trade it. First TP there. And ultimately you can kind of see the hesitation around there. But that's it. 1 minute looks a little big. So I mean you could refine it a little bit lower to 30-second. I would aim for something like that. But for the sake of this, we'll just go there. When it does tap into my 1 minute like this, and does make the one move away, like you can see here, it makes a move away, I will then no longer look to take this trade, and I'll refine it on a lower time frame, and that's the only time that I would actually look to go long on the 5-second, because this just could be a whole bunch of play to then continue a little bit higher. Let's go on the 5-second. I don't know if it actually does come down here. It does. So it does tap into my zone. The ideal entry would be here. I don't believe there even was an entry. Tap into a 10-second. Could take it long here. It's at this point it's pretty far off the zone, so taking an entry like that is not really smart. And well, you would have lost it, so there's that. You kind of get away with that. You most likely would have taken the loss. Your zone would have been this. Your stop loss would have barely gotten hit. Then it would have reversed. Oops. Let's go back here. Then we can take the bottom zone down here on the 1 minute, because we know it's a ranging market. There's not really a clear direction. So taking a 5-second on this bottom zone. You get the push up, push back down. again, wick the low. If you didn't want to take that, that's fine. Normally I would just buy stop this right here. Stop loss on the low. Target, first target would be like right here. Like that. Next target, you can kind of just aim for whatever. This is all pretty shit. But if you didn't want to take that, you could have just taken the zone here. Had the choice of taking longs, like entry here, stop loss here, or entry here, stop loss underneath this zone, to kind of protect yourself a little bit. Or just take less risk on this and then take both of them if it happens. Good trade. Worked. Hindsight though. Yep, there's that. Last one was at 1 minute up top. And so if we go to a 5 second and we go to confirm that, pretty simple, pretty obvious trade. Jumps in, breaks this zone again, taps into here, don't see the continuation above this high, kind of fails and then breaks down. Very minor break, but like that's like going to a line chart. You can see it does break. Structure, break, come down. Comes back up. Where does it come back up to? The candle right here. Stop loss above the high. Yeah, if you then took the continuation, probably would have been a loss unless you change the time frame up. There's something better. Nope, doesn't look like it. So probably would have taken a loss on this. And then you would have 100% taken a loss on the next entry too. So big reason is getting in early is 100% the best. Actually, no, you wouldn't. I apologize. Zone here, probably cover a candle or two above because it's a small stop. Your first target would most likely be around here. And then the other one target would be here. And balance candle beneath. She would have been out here. You could have taken both of them. Pretty decent setups. Let's go back to the last one. Is this one super sketch, super shit zone. Tapped into the 1 minute, moved away. Would have refined this on a 30-second to something a little bit smaller. Or honestly, the 1 minute, and we would have barely just missed it. There's a chance you could have continued to take this, like, because it did sort of get near and then break down again. But you're kind of trying to get into this little premature, and there's not exactly like, you didn't even tap your zone, to be honest. I'm sure if you got a perfect zone, then you would have been fine, but most of the time that doesn't happen. So there's that. That is the daily overview. Trending markets, a lot easier, just buy and sell one direction. Buy or sell one direction. Ranging markets are kind of confusing to do, but I kind of just play the highs and lows of both sides. Again, this is the example of candle can't close beneath the low, and it pushes all the way back up. So that's it. That is 417.24.